If you've bought crypto dozens of times but only sold a few times, Form 8949 probably looks like a nightmare. Today I'm solving that nightmare. Subscribe now for more crypto tax tips. I'll show you exactly how to report 50 purchases and 10 sales on your tax forms step by step. Plus, I'll reveal the mistakes that trigger IRS audits and how to avoid them. Let's start with the question I see everywhere. I bought crypto 50 times. I sold it 10 times. How do I fill out Form 8949? Here's what most people don't understand. You don't match one buy to one sell. Instead, you use what's called a cost basis method. Think of it like this. Imagine you're stacking books on a shelf. Every crypto purchase is a new book added to your stack. When you sell, you need to decide which books you're removing. Do you take from the top, the bottom, the most expensive ones? This is your cost basis method, and the IRS requires you to pick one and stick with it. The most common method is FIFO, first in, first out. You sell your oldest crypto first. Let me show you exactly how this works with a real example. January 1st, you buy one Ethereum for $2,000. February 1st, you buy one Ethereum for $2,500. March 1st, you buy one Ethereum for $3,000. April 1st, you buy one Ethereum for $3,500. May 1st, you buy one Ethereum for $4,000. Now, December 1st, Ethereum hits $5,000, and you decide to sell 2 ETH. Using FIFO, you sold your January and February purchases. On Form 8949, you create 2 separate lines. Line 1, description, 1 ETH. Date acquired, January 1st. Date sold, December 1st. Proceeds, $5,000. Cost basis, $2,000. Gain, $3,000. Line 2, description, 1 ETH. Date acquired, February 1st. Date sold, December 1st. Proceeds, $5,000. Cost basis, $2,500. Gain, $2,500. What if instead of selling 2 full Ethereum, you sold 1.5? Now your first line still uses all of January's purchase, but your second line only uses half of February's purchase. Line 2 becomes description, 0.5 ETH. Date acquired, February 1st. Date sold, December 1st. Proceeds, $2,500. Cost basis, $1,250. This is why 50 purchases and 10 sales doesn't mean 10 lines on Form 8949. It could mean 30, 40, even 50 lines, depending on your amounts. Let me show you a more complex real-world scenario. You made 50 purchases of Ethereum over 6 months. Each purchase was different amounts at different prices. Now, let's talk about the other cost basis methods you could use. LIFO, last in, first out. You sell your newest crypto first, HIFO. Highest in, first out. You specifically identify the most expensive purchases to sell first. This minimizes your gain every time but requires meticulous record keeping. Here's the critical warning. Once you pick a method for a particular cryptocurrency, you should stick with it. Switching methods without proper documentation is a red flag for the IRS. Now let's address the exchange reporting problem. PayPal, Coinbase, and other platforms will send you a 1099 form. But here's the catch. For 2024 and earlier, they often don't report your cost basis. So the IRS sees you sold $50,000 of crypto. Without your cost basis, they might assume that entire $50,000 is profit. Let me show you exactly how to track this properly. Create a spreadsheet with these columns. Date purchased, amount purchased, total cost including fees, price per coin, platform, transaction ID. Then add date sold, amount sold, total proceeds, price per coin sold, platform, transaction ID for every single transaction. Here's a real example of why this matters. Someone bought Bitcoin at $60,000. It dropped to $30,000. They sold at a loss. Their exchange reported $30,000 in proceeds but no cost basis. The IRS sent them a bill for taxes on $30,000 of income. They actually lost $30,000. It took months to fix this mess. Now let's talk about transfers between wallets. You buy ETH on Coinbase, transfer to MetaMask, transfer to PayPal, then sell. Each transfer is not a taxable event, but you must track them. If you can't prove when and where you bought that ETH, you can't prove your cost basis. No cost basis means the IRS can assume zero cost basis. Let me give you the exact Form 8949 process step by step. Step 1. List all your cryptocurrency sales for the year. Step 2. For each sale, determine which purchases it uses based on your cost basis method. Step 3. Create a separate line for each purchase-sale combination. Step 4. Calculate the gain or loss for each line. Step 5. Total everything and transfer to Schedule D. Now, here are the mistakes that trigger audits. Mistake 1. Not reporting crypto sales at all. The IRS knows. Exchanges report to them. Mistake 2. Reporting only net gains. Mistake 3. Round numbers. Reporting exactly $10,000 in proceeds looks suspicious. Report the exact amounts. $10,047.32. Mistake 4. Missing cost basis. Never leave cost basis blank. If you truly don't know, you need to reconstruct it. Mistake 5. Inconsistent methods. Using FIFO for some sales and LIFO for others without proper documentation. Let me show you how to handle special situations. Mining rewards. Report as income when received, then that becomes your cost basis. Staking rewards. Same as mining. Income when received, then that's your basis. Airdrops. Report fair market value as income, that becomes basis. Forks. More complex. Original basis splits between original and new coin. DeFi trades. Every swap is a taxable event. First, if you have more than 20 transactions, consider using CryptoTax software. Popular options include CoinTracker, Koinly, TaxBit, and CryptoTrader.Tax. These programs can import your transactions and calculate everything automatically. Second, keep records of everything. Screenshots, CSVs, transaction hashes. The IRS allows electronic records, so save everything digitally. Fifth, if you're unsure, consult a tax professional who understands cryptocurrency. Not all CPAs understand crypto. Find one who does. Fourth, don't try to hide transactions. The IRS has more data than you think. With the new 1099 DA form coming in 2026, they'll have even more. Let's talk about some practical tips for making this easier. Tip 1. Use fewer exchanges. Tip 2. Download your transaction history regularly. Tip 3. Track as you go. Tip 4. Include fees in your cost basis. Tip 5. Keep records for at least 7 years. Here's a quick hack for simple situations. If you only use one exchange and never transfer crypto out, your tax reporting is simple. The exchange tracks everything. Remember, the burden of proof is on you. If the IRS questions your cost basis, you need to prove it. No proof means you could pay tax on the entire sale amount as if your cost was zero. One final important point about wash sales. Currently, crypto is property, not securities, so wash sale rules don't apply. But this might change. Stay informed about tax law changes. The key takeaway here is this. Cryptocurrency taxation is complex, but manageable with proper record keeping. Every purchase needs to match to a sale using a consistent method. FIFO is simplest and most common, but other methods might save you money. Take the time to do it right the first time, because fixing it later during an audit is exponentially harder and more expensive. Good luck with your crypto taxes, and remember, when it comes to the IRS, accuracy matters more than simplicity.